Good morning and welcome to Business Lens on Rapid TV. Many apologies for starting late. Some technical issues have now been resolved. My name is Faith Daffer Joseph, and as usual, on the Business Lens, we get to talk about major headlines in the world of business, the economy, and finance. Okay, and of course, I do not get to do this alone. I have with me to help unpack some of these headlines, of course, my analysts who are bringing as we go on. But some of the headlines to look forward to today that we'll be talking about, well, recapitalization of banks. So we get to look at that, how many banks have been able to succeed to do that. So we have less than 200 days to the deadline. So what's going on with that? We get to look at that. And then also we talk about Nigeria falling behind when it comes to production of oil below our OPEC quota. We had just been rejoicing that Nigeria had been able to, actually surpass our quota, which is something that we had not done in a long time. But in the last 3 months, we're able to do that. But then it seemed to drop again in August. What is the reason? The NUPRC is giving us a reason for that. So we get to talk about that, as well as supply of crudes to local refineries. That's another headline that we will be looking at. But today, something really important is happening, and that is talking about the fact that the MPC meeting is going to happen in the 301 meeting, and because of the decline in inflation rates in the last couple of months, there are a lot of experts calling for MPR to be cut. Will the MPC go along that line? That's another thing we'll discuss today. So let me bring in my analyst. Welcome to the show, per usual, Mr. Abiel from Keto Markets, and of course, Mr. Daniel Afar, our global financial market analyst. How are you doing?
Yeah, it's good to be here.
Good morning. Good to be here.
How are you doing, Daniel? I need to ask you specially.
Because of the weekend.
The weekend.
It's the start of a new season.
Is this?
you turn to a preacher.
We have to get the engine
Turn to
running.
pastor.
When
Subsidies.
But when they are winning,
We have to stop
do you understand what I mean? But I feel sorry for you, but it's okay.
It's just the start.
It's the start of the
We
season.
have to recover and we still do our thing.
Says every Chelsea fan at the beginning of the season. Anyway,
this guy is
The
blue.
end just
let's
Let's
move on
There's
from
no lights at the end.
let's move from the football conversation. Let's talk about business conversations right now. Let's start off with this recapitalization of banks. We do know that the CBN has its deadline for banks to do their recapitalization. We know the number of banks have actually been able to do that. A number of the first tier banks, at least 11 banks, they've been able to cross the finish line. The kind of funds that the CBN is expecting all the banks to have now, and it's also because at the end of the day, most of the times when it comes to funding huge projects, huge capital projects, our banks have never been able to step up. And then when you have macroeconomic shocks, because they don't have as much capital, they get affected. So the CBN is doing this recapitalization thing. Well, of course, we know that you are asking international banks to raise 500 billion, 200 billion for national banks and 50 billion for regional banks, right? And all of this is supposed to come to a head by next year. I think first quarter of next year, they're supposed to have all of this sorted out. So some banks have already crossed over that, some with raising, issues at the capital market and things like that. But there are other banks that have still not been able to. Do you see mergers and acquisitions coming from this? There have been talks about that as well for banks that are not able to meet up. What do you think?
At the end of the day, once there's a deadline, it's either you step up or you step out. So I personally feel that a lot of banks right now might not want to go the merger route. And the reason is because you find out that some banks currently have gone through 2 mergers already, so it's already a concussion of so many banks. If you look at what is behind the logo and the name, so they might not want to complicate matters further, and I feel that some of them might just want to seek for a way or other ways in raising this capitalization by themselves. I personally am close to the banking sector, so I'm close to some players there, and I see how internally some of them have started driving their top staffs, a whole lot to be able to maybe meet up with this capitalization issue. So I think some measures will happen, but I don't think a whole lot of measures will happen from my own opinion.
Okay, I would like to bring Daniel in, but we need to quickly go on a break. And when we return, I'll get your thoughts on what is going on with the banks and the recapitalization. If Ms. Abela doesn't think that we'll get mergers and acquisition, but, We'll see.
Yeah.
Stay with us. After a very short break, we'll return to continue this conversation right here on Business Lens on Rapid TV. All right, welcome back. Still Business Lens here on Rapid TV. And yes, I was just talking about the recapitalization of the banks and how some banks have been able to cross over the threshold, but some haven't. Some top-tier banks that you would expect would have been able to scale through, like some of the banks have done it already. You know, we have banks like GT, Zenith, you know, they've already crossed over the threshold access. But you have banks like UBA, you know, FCMB, Fidelity that are not totally there yet. They say that they will get there. And, you know, there is belief that they might be able to do so. But Mr. Biola is saying that he does not see any sort of consolidation happening or mergers and acquisition. Where do you stand on that?
Okay, so I think that personally, I feel the amount required for international banks, for example, I feel it is small. I feel that if you're going to target a $1 trillion economy, I think your banks have the collection of just 500 billion, which is less than $1 billion, is way too small, right? But at the end of the day, we are there now, right? We have banks that have easily crossed, right? We have banks that are struggling to cross. And I think what will eventually happen is this. Maybe this would further achieve what we did in last time we did that, where we saw a lot of mergers, we saw a lot of numbers suddenly reduced. I think it was at 48 before then, and by the time it happened, banks were now 25. I think something like this would likely happen, right? Where we might not see mergers, we might see takeovers. And I think
like
that is what eventually,
as
acquisition will eventually happen. Consolidation will eventually happen. I think we've seen one already. Providers and Unity Bank are already in conversations for that to happen before March. Union Bank. So and some banks will eventually not be able to achieve the 500, but will probably remain national banks or regional banks. For me, I think more often than not, I think this should be maybe a 5-year conversation or even a 10-year conversation, so that it's better. The number of banks doesn't necessarily guarantee a stable economy, a solid economy. I think stronger banks are way better. That's why you see countries like South Africa have less than 20 banks, and the economy is robust. So this kind of conversation should begin to now lead the way into us having a streamlined banking operation. Yes, if you're going to have a lot of fintechs, fantastic, right? But the real traditional banks the requirements should be larger so that we can have a bigger, because this is the risk we are being exposed to. Remember that a lot of these international banks that have met up, really, if you see their numbers, it's more of their foreign numbers. It's more of their foreign numbers that have really pushed these conversations. The Nigerian operations is still at a point whereby it's still too fragile, right? We saw what the CBN did with forbearance. You can see that a lot of them were struggling with forbearance. But some of them are not declaring dividend because of that. So the robust nature of what we're looking for as financial stability will still have to come from us limiting the number. We need bigger banks, right, than so many banks.
So do you see this recapitalization as something that can happen again? You know, maybe this is the first, you know, under this CBN, you know, governor, but maybe after this, another recapitalization will probably happen in a couple of years from now. Because if you look at it, like you said, 500 billion is not huge for banks that claim to be international. Because what we have seen, if you look at big projects that happen in Nigeria, what we also see is that no Nigerian bank can ever fund those projects. So we always have to go abroad, you know, with these banks to help in partnerships. You know, meanwhile, abroad, this is not usually what happens where the banks are bigger. So what it just means is that the Nigerian banks, they might, you know, seem like they're smiling to the bank. When it comes to the real weight to pull, they're not really able to do so.
I also feel that this conversation needs to also bring into the front exactly how do our banks make money, because when you talk about banks in Nigeria, it's two major ways that usually just pops into the head of the average person. That, well, how do our banks make money? Deposits and loans.
Yes.
I know they make money in other, you know, through other ways, but it's become very conventional for banks to just focus on these two things alone. When you enter into a Nigerian bank, what do you see? You see tellers in front, okay, just arranged. Do you see business development guys? Do you see people that discuss inventions or whatever you think you have that can actually be of value to the bank. Do you think Nigerian banks are actually going to sponsoring projects and businesses and ideas that they feel that this will be very profitable to our downline in the next 5 years? Your guess is as good as mine. So I think bringing into the conversation how our bank exactly make funds or make money, make profit, would also go a long way to let us know if they have capacity to be able to move up the trajectory in a couple of years. What I'm saying is, if you continue pushing for just deposits, warehousing money, and doing loans, is that enough?
And bank charges.
Yeah, of course, I didn't want to go there. Like 25 bank charges. In 2025, is that alone? Is it enough for a bank to be as strong as possible? Travel outside of the country, and when you enter some banks, you find out that you don't see this same pattern. Okay, you see people you can actually sit down and discuss with. In Nigeria, when you talk about the marketer in a bank, all that comes to your mind when the marketer visits your office is, Oga, come and deposit or take loan. That is all they talk about. But if I tell you that, look at this, can you give me an audience with your ED? Let me present this stuff. I'm sure this thing is going to make money. I want the bank to own equity in this. I don't think you have that conversation.
I mean, we can go on and on about this conversation, but let's move on from there very quickly. We'll see what happens, with that by next year. So we have the CPPE saying that, despite this inflationary easing that we have, that's the Center for the Promotion of Private Enterprise, saying that we still have stronger, consumer confidence weak. We still have weak purchasing power, and the decline in inflation rate that we have seen over time is not something that has spread across to the ordinary Nigerians, just yet, and it's not time for any sort of victory lap. Yes, people are starting to adjust their expectations, as inflation is slowing, you're seeing households starting to adjust, but they're adjusting. It doesn't mean things are getting better, and so it's not time to do a victory lap. What do you think?
I think I agree, and I agree with that assertion, and that's what I usually say, that what people don't understand is price follows value, also follows perception, and that is what basically happens with CPI. So even when your CPI is declining, right, or disinflating, because you can't say declining because this figure is still rising, but not. If it is disinflating, you still need consumer confidence to feel, okay, yes, this is what we are feeling in the market. And so what happens is that the demand will remain constant. But if there is this feeling of there's no difference yet, so it will still come back to that conversation that we've not really solved the problem around inflation. And that is what I would always talk about in sense that no matter how you look at it, right, if you're comparing the kind of disinflationary era we are to what we've seen with other climes, global north, the UK and the US and co., realize that there is this positive perception towards interest rate conversations and inflationary pressure. So there is almost this, it follows like market almost reacts to it. So if the same thing doesn't happen to us, it simply means that our inflationary pressure is way more than what the data is saying. It is way more deep, it is way more harder for people on the streets to really afford these things. And what we are still saying is that and that's what I said, until we get back to 10%, 11% pre-pandemic pricings, it is still unaffordable, really, for the average Nigerian. Exactly.
I mean, at the end of the day, we see, people talking about, inflation is slowing down, things are getting better, but can the average Nigerian actually say that they went to the market and things got better? And things are, looking up for them. Like I said, I think what has happened is that there's been a lot of adjustments. People are adjusting. Also, I mean, you can give credit to the government for that. There's a bit of stability. So people are sort of adjusting to the new normal. But it is not because their purchasing power has increased. It's not because their earning power has increased. They're just adjusting. Right?
Yeah.
Anyway.
And one thing to also note, particularly when it comes to CPI basket, is that some prices have not adjusted, thereby forms a decline. Doesn't mean these prices are still not high. For example, now, if someone brought in a car 2 years ago and is selling a car for 12 million, because nobody's buying it yet, that price will still be quoted as 12 million. Doesn't mean that the demand has solved the problem. That product is still being priced at 12 million, but it is still high. For the people that should buy the product. So the decline in inflation is not absence of inflation. It's just a non-presence of continuous increase in prices.
Yeah, that means it's a deceleration of the increase in prices, because inflation is the rate of increase.
Exactly.
So, like you said, if inflation was, let's say, 50 before, just saying, and it keeps moving at 10% every month, and that means from 50 goes to 55, 55 goes to 60.5, and so on. Now, if it now starts slowing down, it doesn't remove the 60 back to 50.
Exactly.
It just means that 60 will now go to maybe 62.
62.
Yeah, that's what's going
on. Anyway, we're going to talk more about inflation and, of course, the MPC meeting. They're expecting for it very soon. But I wanted to touch on this first. I think it was last week we were talking about the fact that Nigeria, dropped its production, capacity. We had been rejoicing over the fact that we're able to surpass the OPEC quota, I think we did it consecutively for a couple of months, and then all of a sudden it dropped again. So now the NUPRC is coming to explain the reason why, and saying that that drop was driven by a single day of unscheduled maintenance at an oil facility, So, even though we had going over the OPEC quota in June and July, by August it dropped, and they're saying, well, there was an unscheduled maintenance in an oil facility. That's the only reason why this did. So Nigeria was able to pump an average of 1.43 million barrels per day of crude in August, as opposed to the 1.507 million barrels per day pumped in July and 1.505 million barrels per day pumped in June. So they're saying, the 1.43 million, what happened was that there was an unscheduled maintenance. We didn't see that
for
coming.
1 day?
It was, yes, and it just sort of like crushed everything.
Well, what I like from this, to be fair, is the fact that at least somebody came out to explain. And I think it's a positive thing, that when things don't go the way they should, there's somebody will at least come out and say, this is the reason why. I've been in countries where there will be a power outage, for 6 hours, for 8 hours. Somebody comes out and says, there would be a power outage between so and so time. Some telecoms will tell you they're going to be having maintenance. Your banks will tell you. So if the government is now doing this, then for me, that's just the area I want to look at, and I'll say it's a good thing.
And for me, I'm going to look at it from the angle of the fact that we've done 9 months in the year already, and
the baby should come on.
8 months. 8 of the 8 months, we've only met quota twice, right? So I just feel the statement is just to make us happy. There's no trend yet. There's no trend yet that shows that we've met our quota. We've only done it twice, and if you've done it twice, you can't do the third time. It simply means you really cannot. So if you look at the average.
Wow, you're very positive, Daniel.
No, if you look at the average from January till date, right, it is still around 1.4 million barrels. So why you've done it twice in a month? It's because basically what they've done is that they've celebrated the 2 months as if they've done it for 2 years, right? So now you're back to your previous usual figures. They're trying to tell us it's a maintenance issue. It's, for me, it's a very good way to communicate, yes, but it doesn't necessarily mean that if we've been meeting quotas from January up until July, fantastic excuse to give that is the reason why. So the only thing I'm saying is that you are going back to where you were.
So basically, 2 out of 8 months, you were able to surpass it.
I don't want to accept that. I believe that before we can make this conclusion that Daniel is trying to make, we should give at least an extra month. Because if you have 2 good months, 1 bad month,
starts from January, sir. From January,
the 2 months that we met our quota was when?
June and
July.
Yes, now.
So let's say that there's been an improvement.
Yes.
So it's like going back to your previous.
No, you can't conclude that we have gone back because there's no consecutiveness. It's not consecutive.
So you can also temporary setback. You can also say that we've clicked getting our quota. You've only done it for just 2 months. That's my point.
But the 2 months is recent. We're talking about recently. We're not talking about
since January. And the 2 months are consecutive.
This is a monthly flow of your quota. You've not done your quota in 5 years, right?
And now we started doing it in July.
Just in July.
We started doing it from July.
June and July.
Had a temporary setback.
Within a 2 month period, what's guaranteed that you start again? It will not happen in the 3rd month.
It won't.
You're being very pessimistic.
That's realistic.
We are going to wait until we get the September figures, right? And then let's see
we'll now conclude.
if this
we'll be back here by the end of the year.
You are so pessimistic.
It's a monthly average.
We're going to go on on the break. When we return, let's talk about the MPC meeting happening today, and I want to get your predictions.
Okay.
You know, because we're going to revisit those predictions afterwards. Stay with Ravi TV. It's still a business lens. All right, welcome back to the Business Lens on Rapid TV. And I did mention earlier that we're going to talk about the MPC meeting. It is long awaited, highly anticipated. What is going to happen at the MPC meeting? We are going to be talking about what experts and a lot of people, analysts, are calling for some sort of rate cut. But are we there yet? You know, that is the question, because we know that the last MPC meeting saw the CBN holding, you know, they didn't cut rates, they didn't increase it, they just held still 27.5%, actually, which is one of probably the highest interest rates in Africa, you know. But at the end of the day, we have had a few months of consecutive decline in inflation rate. And there are people who are saying, now that we've gotten here, maybe it's time to start to cut rates. NECA, in fact, had called for the CBN to start to cut rates, and there are some other experts calling for that to happen as well. Let me turn to my analysts. I want to get your thoughts, your expectations. You know, MPC meeting is happening today, tomorrow, so we'll find out what the CBN is planning to do. Do you think it's time to start cutting rates, Mr. Biola?
I personally think it's time to start cutting rates because from what we are seeing, we need to encourage more borrowing, which would in effect also continue to affect the inflation rate coming down. And at the end of the day, I feel it's just a logical thing to do. But my prediction is that CBN is going to hold, because analysis sometimes in Nigeria is a very funny thing. We've seen a situation where the CBN kept on increasing, even though the effect was opposite, and we all expected that, oh, they will now cut it. But no, they did not only not cut, they did not hold, they increased. So I think that it is time also to start cutting, but my prediction is that the CBN will hold at the same rate.
Daniel, what are your thoughts?
Okay, so if we're going to follow the approach or the attitude of the MPR since this current CBN setup, you would say they would hold rates, because the fundamental around that is that if this inflation is still fragile, you don't want to, and they're just getting stability of the naira this past few quarters. You don't want to touch anything. So if it's working, leave it the way it is working, right? That is one part. If that is what eventually happens, what this is the implication. It suddenly would begin to now question the real motive of the rate increase in the first place. Now, because look at it this way: if, for example, if there was no rebasing, if let's assume this particular current prices, current rates, current inflation CPI is what we had, if interest rates would never have gotten to 27%. If it was this low, if all along highest inflation we got to was 25%, it should never have gotten to 27%. That's one. Number two, if you're saying rate has been declining for 5 months and you're not cutting rate, it shows that your goal is not inflation targeting. Your goal is something else, because if targeting inflation is actually declining based on what you are targeting, and if it is declining, you should decline with it also. The curve should not remain stable when this is declining. It should also decline. So if it is not doing that, then there is a problem. The MPC needs to communicate to Nigerians what exactly is their end game. But all along from their communiques has shown that the reason why they've been increasing, and the last time they held, was because they feel that they still need more data to really confirm that, yes, it's really declining, it's really an era of disinflation. And I think that is what they have now. So that is why I, in conclusion, will feel that based on these conversations, there should be some level of cuts.
50 basis points?
Max,
75?
it will be max 50 basis points. It might just be 25 basis points just to test waters and say, okay, our conversation in November would be, let us see the trajectory continue. If it continues, we do another rate cut, right? because this is why they would not want to do anything more than 50 basis points. We are still releasing a lot of treasury, still using treasury bills. We are still getting inflows that we've been using to defend the naira. It's now within the So when we see that we still want the international community to still feel our rates are still attractive for us to keep. So what I feel the CBN I feel the MPC would eventually do is cut rate, release issue another bills and see what the rates would be, because rates before this the last week rates went as high as over 20% already, right? Something that was hovering around 18-19% for the longest. So with that decision and it goes beyond 20, that means that there's an expectation that there might be a rate cut. So if they eventually do that and they observe that the market still jumps on the offer, there might be a further rate cut if the inflationary pressure if it still keeps going down at this rate. So either way, we cannot escape a rate cut in September or November. But I would prefer a September and hold in November to give an idea of what happens in the new year. Because then people are taking out cash by December. They need to know that there is still an upward trajectory of whatever we are trying to do going into the new year, rather than hold the rates now and cut in November, which might give a very wrong signal going into the new year. So either way, we must cut.
What's your prediction?
So we must cut.
No, what's your
we should cut. But
no.
It's a
how many
prediction.
basis points?
I'm saying maximum 50 basis points.
Okay.
Okay,
Yeah.
because let's talk about this. So we've had decline in inflation rate for like
5 months.
4 or 5 months, right? And one of the things that the MBS stated, I would always remember that, is saying that if you look at the steady food inflation, which is about 21.78%, they're talking about the fact that the reason why we have that happening is also because of the rebase figures, right? The MBS actually stated that clearly.
Yeah.
So yes, the CBN might be looking at, or the MPC might be looking at, like, let's see, if this is not just a function of rebasing, let's see if the figures will continue down that trajectory. But then, you were talking about what is the goal for the CBN exactly.
Yeah.
Is it about attracting portfolio investments, or is it about actually, targeting inflation? So maybe it's two goals. They're working in twin goals at the same time.
Of course, that's how it should be. It should work in tandem. That's why I don't support a very steep cut, right? Because normally, if you're looking at the inflation trajectory, you should be having a steep cut, maybe like a 150 basis points. But because of the fact that you are saying it is still fragile, right? It also you are just meant to just cut and see, right? So this is more like just like what the US did with 25 basis points for their own rate, now back to like 4.25. It's the same thing we should also do, but ours is a different conversation entirely. We've not really said rates has been the reason why inflation pressure is declining. No. More often than not, it is the effect of what the rate has done, which is also the result, because we've seen stability in the naira to dollar, which is a major conversation. As soon as it started stabilizing, inflationary pressure started reducing. So that means that there is a very big correlation between that. And the fact that we now have more funds coming in through portfolio, it means that the CBN is now able to further do that, right? So even if we have a decline, right, of the naira back to 1.5, we are still at our highest or our lowest point at the beginning of the year. So it is still a good conversation, even if we do a cut and the effect is that there's pressure on the naira. So that's what I'm saying. The cutting now is meant to drive a sentiment that our approach is working. That is why we are.
Let's talk about. I just wanted to just cut a parallel between what is happening here and what's happening in Ghana. Ghana had a declining inflation for 8 consecutive months, right? And so when they had that happen, what they did, which was very interesting, was that the last MPC meeting before this, they cut by 200 basis points, and then they came down to 23% for their interest rates. Then after they saw the decline again for another quarter, the Ghana CBN cuts again by another 300 basis points, bringing their interest rates to 21.5%. But Ghana has a target of inflation. They're looking at 9 to 10%, and they're already at 11.5. Wow. So you can see that, well, they're very close to their target. but they had a decline for 8 consecutive months, and so they were able to do this. So we've had a decline for like 5 months. Maybe the CBN should do a wait and see what is going to happen in the next few months before they decide on whether they're going to cut or not. Because if we look at our situation, is a little different also, because looking at what's happening with our currency, we had the naira start to trade at less than 1,005.
Yeah,
you know,
briefly.
which is a feat, really.
it is.
And that is also because we have had enough of popular investment coming in. Yes, it's hot money, but you know, the CBN is able to do a lot more with stabilizing the currency. So that's like an indirect correlation that you might not be able to target inflation directly. But you know, once your currency starts to stabilize and maybe start to lower, it also might affect your inflation rate in a roundabout way.
I also want to say something on a different note with all these things we're mentioning. The MPC is becoming a very popular fundamental news in Nigeria, and I think a whole lot more should be built around this. What I mean is that in the US, for example, when some major news are about to come out and they're ahead of, you know, whatever comes out to say these things, is televised live. A lot of traders are there waiting to trade because this singular news of MPC cutting or not cutting interest rate should affect a whole lot of sectors and instruments across the Nigeria, you know, economy. And I think that it's something that should be much more publicized, so that even if it is possible, this is done live. A lot of websites are carrying it, so that because it's meant to even affect the stock market.
True.
So I think it's something that can have secondary and even tertiary effects, okay, on the economy, and it's not receiving as much, you know, publicity as it should. I think we should do more in terms of this. Let people, let all of us be in front of our
We'll tell
TV.
the MPC and the CBN to do that. You know, like maybe come to Rapid. Let's cover it.
Yes,
live
come
for
to
you.
Rapid. Let's cover it live.
And
Yes,
then
fantastic.
we can you know, make sure
Because
that it's
what happens is
publicized.
that instantly when those things come out, you should see some little, you know, movements
In the market.
Yeah, the exchange rates, price of shares, and all manner of you know stuff.
I mean, but I think that, you know, Nigerians are still to pay a lot of more attention to the MPC. There was a time that, you know,
Nobody really cares.
nobody
Nobody
cares.
At the end of the day, I think that even for the MPC, this time around, I think we should come out to say this is our inflationary target for the near term, right? For the medium term and for the long term. It helps so that it also has this sentimental way it drives prices also down. So if we're saying if fiscal guys have said it is 15% they're targeting for the year, what is the MPC saying
Is their
for
target.
that? So that gives an idea into. Of course, I know nobody wants to come out to say that because nobody wants to be held responsible if it doesn't work. But we have to know where we are going. So at least know where we get there.
Like you say, fundamentals and sentiment is a whole lot.
Yes.
Now let me tell you what happened last week. Briefly, I was looking at the exchange rate on one of these apps, and I saw that the exchange rate had gone just below 1.5. You know, by the time I looked at it 2 hours later, it had even dropped another 5 naira. So the mindset is this: a lot of people that have their monies in USD or whatever, immediately see that price is going down, there is this fear that I don't want this thing to become worthless in my hands.
So they start
so
trading.
so start trading and
Exactly.
pumping more,
Exactly.
it goes down further. So I think the same thing Daniel is trying to say, that let's have a lot of sentiments in the market. It's still part of the market at the end of the
I mean,
day.
at the end of the perception drives the market.
Yes.
So they need to like focus on that. But we'll see what happens. You know, today you are predicting that they
We
hold.
hold.
You're predicting like a 25%,
dropping.
max 50% basis point.
Yes.
All right, okay,
They are dropping
we'll confirm by Monday
By
what the
Thursday.
move
I'm
the move
winning.
will be. Anyway, thank you so much.
Thank you.
As always, and whoever wins is buying lunch. Anyway, thank you
Very
so
good.
much for being with us on the Business Line on Rapid TV. My name is Faith Dafa Joseph. We'll do this again, of course, on Thursday. On the other side of this, we have the news, Rapid TV news coming up. I'll give you all the information about everything happening around you and around the world. Okay. My name is Faith. Enjoy the rest of your day.